What's up guys, Mickle here, and in this video we're going to be breaking down a brand new filing in the Ripple SEC case out of the SEC. We have seen as of recent the court has been losing a lot of patience with the SEC. Well, the SEC just submitted another absurd motion. In this video we're going to break down exactly what that motion was and why I think the court is going to react very negatively to this most recent motion out of the SEC. As of recent, we have also been getting some excellent news on the regulatory front for cryptocurrencies. It seems like the CFTC is really stepping up big time and getting ready to take complete control of this market. Earlier today, we had a hearing on Capitol Hill with the CFTC talking all about cryptocurrencies. I watched the entire thing and I want to let you guys know the parts I found most interesting because it was actually extremely positive and I'm starting to see some very big things developing behind the scenes. Guys, this is fantastic news, not only for the current case between Ripple and the SEC, but also the entire crypto market. I want to show you that regulators are getting very sick of Gary Gensler's SEC, and this is fantastic news for the retail investor. Last of all, at the end of the video, I want to cover a question I have been getting a lot, and that is about private ledgers. People constantly ask me whether or not banks currently utilizing private ledgers will ever switch over to the public ledger and why they would do that. I think a lot of people get worried that these big institutions will just keep using the private ledger and therefore the price of the XRP they own on the public ledger will never increase. Well, lucky for us, that is very far from the truth. Make sure you stick around till the end of the video because I'm going to break that down in detail. Like always, guys, if you are new to this channel or come here all the time, please take a second to hit the like and subscribe button down below. It goes such a long way in helping this channel grow, and it really does mean so much to me. If you guys are ever looking for a good place to buy some XRP, make sure to check out the link in the description below. With that said though, let's jump right into it, and I hope you enjoy the content. Real quick, if you guys want 6 free stocks, make sure to go sign up in the link in the description below with MOO-MOO. All you have to do is deposit $1 and you'll get 6 free stocks, some worth up to $1,000. With that said, I want to start off and break down this most recent motion in the Ripple SEC case. The SEC just filed another absurd motion in this case. The SEC is so far out of line in this case, it's actually getting disgusting. Just today, and just listen to how confusing this thing has got. This tweet by James Filan was actually pretty funny. James K. Filan tweeted out, "The SEC filed under seal its proposed redactions to the Ripple defendants' response to the SEC's opposition to the amici motion to participate in the expert challenge. The SEC has also publicly filed a letter explaining its proposed redactions." So if you just listened to that entire thing and said, what is that even supposed to mean? Don't worry, I was very confused by it at first too, but I'm going to break this down. Essentially what it is the SEC once again trying to cover up its tracks regarding the Patrick Doody expert report, essentially where he tried to make claims of what he thought XRP holders were thinking when they bought XRP. This guy was essentially paid off by the SEC for him to write an expert report where he made a whole bunch of absurd claims saying that XRP holders were expecting Ripple to drive the profits for their investment in XRP. It is highly speculated that this guy Patrick Doody, the person who wrote the expert report, didn't interview a single XRP holder, and that's why John Deaton is trying to get involved in this motion. John Deaton wants to present actual evidence to the court of what XRP holders were really thinking when they bought XRP. To do this, John Deaton did the legwork and interviewed thousands of XRP holders and asked them, hey, what do you use XRP for? And he wants to present this information to the court so the judges can actually get a realistic idea of what XRP holders were thinking when they bought XRP. John Deaton is essentially making the argument it's not fair that this guy Patrick Doody is trying to speak on behalf of all these XRP holders when he didn't interview a single XRP holder himself. He's simply saying whatever the SEC tells him to because he's on their payroll. Now, we've yet to get an actual decision from the court on whether or not John Deaton will be allowed to present this evidence on behalf of us XRP holders, and whether or not the court will actually even look at what Patrick Doody wrote. But right now, the SEC is desperately trying to hide the things Patrick Doody wrote because, as you can imagine, they were probably pretty disgusting and made a whole bunch of wild assumptions about XRP holders. Earlier in this case, Judge Torres actually ruled that it was not ethical for the SEC to cover up the things Patrick Doody was saying. The SEC tried to get around this by making a whole bunch of absurd claims that essentially Patrick Doody's health was in danger and therefore they have to cover up his report. To me and a lot of other people, it looked like the SEC was just embarrassed by the things he said. Well, luckily for us, Judge Torres was not having this and told the SEC they need to file Patrick Doody's report publicly. The SEC, to get around this, once again came back and they said, hey, well, we at least want to redact his phone number, his address, and stuff like that. And Judge Torres said, okay, fine, you can redact that stuff, but the rest of the report needs to remain public because you're making claims against people that you're supposed to protect. They deserve to know what you're saying about them. And just today, the SEC submitted their proposed redactions and they are trying to redact the entire thing. Attorney Bill tweeted out, "Thanks, James. It's concerning that this letter shows that the SEC is seeking to seal anything, even a footnote that shows the substance of Mr. Doody's evidence. He gives evidence about the reasonable expectations of XRP holders who acquired XRP, but the SEC does not want those XRP holders to see his evidence. The SEC likes to do things in the dark behind closed doors. Mr. Doody's evidence, for which is being paid by the US taxpayer, should be made public. On top of that, the SEC wishes to seal the nature of the threats and the harassment. The very thing that we called out as BS instantly. We knew the SEC was just using this as an excuse to not hand over the Doody report because they knew they were so out of line with even saying the public shouldn't get to see it." Bill goes on to say, "It's unbelievable. The SEC engaged to bring on Patrick Doody. It seems from his evidence in the Telegram case that he probably hasn't spoken to a single XRP holder, but now is trying to make assumptions on what XRP holders were thinking when they bought XRP. The SEC finds an excuse to prevent the entire XRP community from seeing his evidence, and the likely reason for that is because the SEC knows that this expert report is so far out of line, and everything John Deaton is trying to bring to this case should counteract everything he's saying. The SEC doesn't want this getting out there because their mandate is to protect the retail investor, and they know that this expert report was specifically designed to attack the retail investor and make false assumptions about what they were thinking. In the end, I don't think there's any way Judge Torres is going to buy this BS coming out of the SEC. I think she's going to let John Deaton into this case, but I want to know what you guys think. If you guys think John Deaton will be allowed into this case to argue on behalf of XRP holders, I want you to leave me a JD down in the comments section below. So now I want to cover some very significant developments on the legislative front for cryptocurrencies. This is extremely bullish news and something I was very happy to see. Earlier today, there was actually a CFTC hearing solely on cryptocurrencies and digital assets, and it was very bullish. One of the things I was so worried about in the beginning of the CFTC SEC turf battle was that the CFTC wasn't being outspoken enough about their views of the digital asset landscape. We saw the SEC and Gary Gensler coming out daily, essentially saying that they saw everything as a security, and to them it was clear that all these different cryptocurrencies were actually securities, and that's been clear since day one. While the SEC was putting on this charade, the CFTC really remained very quiet and didn't say much. But guys, let me tell you, that narrative has completely changed. In the CFTC hearing today, it almost seemed like common sense that all cryptocurrencies were commodities and the sale of the cryptocurrencies was all the SEC was getting. Now, this is a complete narrative shift from what Gary Gensler has been saying at the SEC, and you can tell his power is being stripped away. This was from Documenting Ripple earlier today, and he said, breaking. Dr. Chris Brummer states that there are no clear rules in regards to digital assets while testifying in front of the CFTC. The SEC's narrative is falling apart fast. The CFTC will control control the spot markets. Chris Brummer is a former head of the CFTC, and when he was talking, he made it abundantly clear. These things are not securities, and there are no clear rules that put these things in the SEC's jurisdiction. He believes that it is much more likely that these things are commodities. They don't necessarily fit the exact definition of a commodity, but it acts a lot more like a commodity than a security. You could tell that the CFTC was really gearing up to take control of the spot markets, and to them it almost seemed like a done deal. I tweeted out in response to this, the CFTC is ready to take control of this market. The SEC's failures have exposed the need for a new regulator. Ripple has completely exposed the SEC. I have a feeling the SEC's shortcoming in this Ripple case has really exposed the need for a new regulator. The SEC has absolutely failed to bring any proof to the case against Ripple that XRP is inherently a security, and I think that has everyone's eyes on the SEC's absurd claim that most digital assets are securities. I think this current case against Ripple is making it more obvious than ever that most cryptocurrencies really are commodities and not securities, and I think the SEC made a huge mistake in pursuing this case this far. So guys, I want to cover super quickly this last topic, and that's about the private ledger. I get questions on this all the time, and it is so important to understand that private ledgers are great for testing, but will never be used once wide-scale adoption happens. I tweeted out, using the private XRPL is like using a private internet for your website. Yes, it makes sense for testing, but it makes zero sense long term. They will move over when they are ready. And then this guy right here responded to me, essentially giving more reasons why he believes banks want more privacy. Therefore, they'll keep using the private ledger and never actually migrate to the public one. I responded to him, what you are saying makes sense, but I believe you are underplaying the importance of the public aspect. We are moving to a world of open, connected systems. Systems that wall themselves off and segregate liquidity will fall behind and fall behind fast as network effects around them explode with utility. Guys, public ledgers are really interconnecting liquidity all over the world. It doesn't make any sense to rebuild the same segregated systems we already have in blockchain form. The whole promise of this technology is to create an internet of value, an internet of liquidity that can go from one form to another all over the world, interconnected and interoperable. At the end of the day, it really doesn't make any sense for these companies not to adopt the public ledger because they're just going to be segregating themselves away from the mass utility. Yes, private ledgers do have a purpose in the forms of testing and even for their own internal transactions, but at the end of the day, that's not what the XRP ledger is looking to solve. It's looking to solve interoperability and to create an internet of value. That will not be done in a private form the same way as the internet did not solve the problems it was looking to solve in a private form. Guys, thank you so much for coming. I really hope you enjoyed this update. If you like topics like I covered at the end here, make sure to let me know down in the comments below. With that said though, I hope everyone has a great night, and for now, Mickle out.